Hello dear viewers, this is the Dukas Copy webinar and you are watching Forex Trading with Rakesh. Today is 31st of August 2022. My name is Rakesh and I'm your host here. I am a Dukas Copies community member. I am not an employee of Dukas Copies, so therefore all the views or opinions or whatever trading ideas that we are going to discuss in this video will be of my own. They have no relation with Dukas Copy. Now, as the name of the title suggests, that we will be carrying out the technical analysis of the major currencies in the forex market. Now, in this live stream, we will be strictly talking about the technical aspects of trading. We will not be talking about anything like fundamentals, like repo rate, yield this rate and that rate. We will be only focused on the charts. And I know that every piece of information is already priced into the chart, so we'll only focus on the chart and we'll try to find out the key levels for all the pairs that we are going to talk. And we'll see how we can use them into our trading. Now, if you are new to the technical analysis, I would request you to go to our channel's homepage and then look for the two playlists that I have made earlier. One of them is profitable candlestick patterns and the other one is profitable chart patterns. These are two different playlists that are there. If you go through them, even after this webinar, you will understand what we talk about here every day, because we come here every day at 16:30 GMT, or you can say whatever is the time right now. If you're watching it now, right now, whatever is the time in your country, this is the time we are here every day. So at the end of the session, I'll be taking the questions from the viewers and I will request you to keep your questions till the end. But if you still ask questions during the session, I will be answering them in the end of the session. It will only take 30 minutes or 45 minutes for the session to end. Now, last but not least, everything that I say in this live stream is only for enhancing your information or knowledge. And I am not suggesting or recommending you to buy or sell any forex pair. What I'm trying to do here is to enrich your mindset or to help you taking informed decisions. Okay, so you do not blindly take faith on whatever I say. You observe what I say. Okay, for some days, observe it, that whether something that I say here happens or doesn't happen, and is it technically a good scenario or good trade to open, as Rakesh says, and try to learn how I do the things. Maybe you will like it. If you like it, there is a thumbs up button below the video. You can press it. If you don't like it, there is a thumbs down button below the video. You can press that, and that is up to you. But you should do your own research before you put your money on the line. Okay, that's all I want to say in the beginning. And now I want you to go through quickly this risk disclaimer, because this is essential. Because we are trading forex, and forex is traded on the margin money, and trading on the margin money is very risky. So you should understand the risk involved first, and then only you should enter in the market of forex. So please pause the video here if you want to go through this entirely, and then only continue with the video. So the first thing that I'm going to show you today, like every day else, is this dollar index. Okay, so we have been talking about the dollar index now from a week. When we had started this webinar series, I think we had started this last week, and that time the dollar index was around here, somewhere very close to 108.89 area, and we were thinking that maybe here there will be a double top formation and something like this will happen, maybe, or maybe it will break up and then come back to retest this level as the fresh support. Okay, this is what these are the two possible scenarios here as far as dollar index is concerned. Now there's no need to explain why we are talking about the dollar index in the beginning. Okay, but still, if somebody is new here, I will tell you that most of the pairs that we are going to discuss, that most of the forex majors, in fact all forex majors, have US dollar in them, okay, as a part of the pair. So we need to know how the dollar is performing in the broader market. So here we can see that today dollar actually up after opening at 108.71, which was a bit lower than the previous closing, after opening at 108.71, it made an intraday high of 109.15, which was very close to the resistance zone at around 109.12. Then flipped to the downside and now is trading lower than the opening, and it has already made an intraday low of 108.32. This is actually a lot of information about what is happening. Now if we just break it down, in the today's information on the 4-hour and the 1 hour time frame, we will know that here first there was an up move and thereafter there was a down move. Now this explains a lot of things. That means when yesterday the price opened higher, it went higher and then eventually was shed off, or you can say was sold off with a lot of you can say aggression. But then after, when it approached the same zone, it was again sold off with aggression, and the price has already broken below the openings and the closing of yesterday, and now it is almost has made an intraday low which is in line with the low of day before yesterday and approximately the same as yesterday. Now till the time yesterday's low is not broken, I think a move below will be moved to the downside towards 104.48 will be difficult. Now the problem here is that US dollar is a safe haven. Everybody thinks that if something goes wrong, then the US dollar will not it will not go to dustbin. This is a general thought. So if anything goes wrong, they buy the dollar. So maybe that's why the euro was so weak against the dollar in the previous times. But technically what is happening here, I'm talking about the pure technicals here. If we see today a close below the low of yesterday, it will be a bearish engulfing as well as a bearish pin bar at the resistance. Now this is a classic scenario to go short. This is a classic scenario to go short, but there is a catch. In this scenario. Why there is a catch? Because this market is in an uptrend. You see the structure of the market. MJ, you are with me, right? The structure of the market is in an uptrend, and you get a bearish pin bar as well as a bearish engulfing at the resistance. Would you go short? The question is simple, guys. Will you go short in this market? Well, I think you already know. No, you cannot go short in this market at this position, although it is very, very interesting area to go short. You will have very small stop loss, a huge take profit target potential, huge profit take profit target of 104.48. But because the structure is uptrend, market can reverse anytime, and you will have no reason. So you have taken a bad decision already here. So what you can do is either wait for the price to go above this 109.12, and then it will be a pullback. That time if you buy, then you will be in the direction of the trend. You will have a very small stop loss. Okay, that is a more favorable trade. Like I said that earlier also, that in the forex market you have to convert the odds, maximum odds, in your favor, so that even if you are wrong, your risk is minimized. Here if you are selling this market and for some reason if the price reverses from here, you have no excuse, because you sold in the buying market, or in the rising market you sold, because the trend is your friend. You have to ride the trend. You don't have to go against the trend. Okay, so this is one thing. You do not sell it here, although it looks very, very, very good at the resistance zone. You get a bearish pin bar, it's good, but it is not a selling market. On the contrary, if you see that there is a sell-off from here, and this sell-off continues all the way below 104.48, then you see the market has made a high, almost equal high, and then after it has made a low, would have made a low which is lower than the previous low. Now if the market makes a previous low which current low which is lower than the previous low, then that means it has made a lower low. Now lower high and lower low means a downtrending market. So if there is a pullback from here to this resistance, and here you get a selling opportunity, that will be more favorable, because this will be the third wave. So you want to ride the third wave. Okay, always, most of the time you want to pick this third wave, because it is important and there is minimum risk involved. if you sell somewhere here, your risk will be approximately 105 points, or you can say 100 points. Okay, like, and your potential take profit will be almost 300 points, and it gives you 1:3 risk to reward ratio. That is what you need. This is the minimum that is required to open any trade. So you don't just fall into prey in such scenarios where the greed takes over your brain. Of course, the greed, most of the time, greed and this fear of losing out takes off, and it haunts your mind. But here you have to keep in you have to explain yourself. You have to ask yourself before you put that money on the line, before you press that button of buy or sell. First question that should come to your mind is, what is the current structure of the market? Is it an uptrend or a downtrend? If you have been listening to my friend Miha, FX Passion, then you would know. You have to always point your fingers in the direction of the trend, and then wherever your fingers are pointing, you have to only trade in that direction. If you're trading against that direction, there is a high probability you will go wrong. Okay, so you don't want to trade in the wrong direction. So here we have an uptrend, so I will not be opening any sell trade. But if it goes up and comes back to this area to test it as a fresh support, I will buy this market even if it is higher, because my risk at that time will be minimum. If it goes below this and comes back to retrace and pull back to this area and find resistance here, I will sell this market, because I will be interested in more lower levels like 101.30 and 97.72. So that is how we should be trading, conservatively trading, but with huge reward to risk ratios. Okay, rewards should be huge, risk should be small. So that is the key. In the long run, if you want to be profitable in the very, very long run, you will see that this adds up cumulatively and your losses are minimized and your profits will be maximized. I can explain that, but we have less time. If anybody have question on risk management, can ask me in the chat and we will elaborate it further. Now, what about the dollar index from here? Now, like I said, if it closes below this, then of course the selling pressure will increase, and maybe the price will come towards this rising channel's support line first. And if it does not support the price in the way it is supposed to, then the price may look to test 104.48. Now, what happens here will be more interesting for us. What happens at 104.48 level? That will be more interesting. Does it hold? If it holds, then again we will enter in the direction of the trend. If it doesn't hold, if it doesn't give us any something like bullish pin bar or maybe bullish engulfing, then it's not our market. Okay, we will wait for it to either break down and retest or hold here like a strong support. Okay, this is also one of the scenario that I have marked right now on the chart. Okay, if you find something like bullish pin bar here, that is again worth taking the risk. Okay, because in that case your risk will be very small. You will be opening the position here with a small stop loss below this market like 48 to 50 points, and you will be targeting approximately 460 points. Almost 1:9 risk to reward ratio. Makes sense to me, and that too in the direction of the trend. Red Starred says hi. Hello Red Starred, welcome to the stream. So this is the dollar index explained, and after this there is euro, US dollar. Now euro, particularly when I was watching euro today, I was seeing that there is a buying at the lower levels in euro. There's a lot of buying. I can explain that, because if you compare it against the pound, you see last week and even this entire week there has been only selling. You can see only the red candles, and the US dollar being common, you can see euro has three green candles. So euro is doing much better than the pound. Then if you compare with Australian dollar here is also in the sell mode. 1 2 3 4 out of 4, the 2 are red candles, 1 is green, and 1 is today's candle is almost a bearish pin bar. It has a very small green body. It will convert into red anytime soon. If you talk about New Zealand dollar, this is also on the similar lines of the Australian dollar. So if you talk about these 4, then euro is winning the trade in this one. So euro is becoming stronger day by day, or you can say there is buying in the euro as far as other currencies are concerned. So I can put my money on the line, but the problem here is that I have set rules. I have set rules that I will not buy a market whose structure is a sell structure, and the euro dollar is in a sell mode from a long time. Now when I say long time, then this sell structure started almost on 3rd of January 2021. So since this is in a sell structure from a long time, and this structure will be broken if we see a close above this price marker of 1.0368. Till the time this 1.0368 is not broken, the structure will not break, and till the time structure is not broken, I will not be looking for any buy position. So I am still looking for a sell position in this market. Now do you think, I am just speculating this one, do you think that this triangle can form here? Just asking. Do you think that there is a possibility of formation of a triangle? Is it possible that the price keeps moving like this? Is it possible? Is it possible? And then eventually breaks lower? Do you think, oh wait, do you think that this type of price action possible? Because I have seen this type of price action many times in my life, many times. Okay, the price moves counter trend, then breaks, then finds some support at a very strong point, then moves counter trend for some time, and then eventually breaks down. So here the selling pressure is huge. We cannot deny that, because it has already made a lower low than the previous low. That means the selling pressure continues. If the price makes a new low, that means the selling pressure is more than the buying pressure. But here there is a buying pressure. Of course, we can realize that there is a buying pressure, but it is not in the direction of the trend. The people are looking for entering this market in the sell direction, and when they can get a best opportunity, they can get the best opportunity at the interaction of the price with this falling channel's resistance line. So there's a possibility the price will break, and even buyers will jump in again at this 0.9952 to buy, and then again sellers will jump in. So this is the area where I think buyers and sellers will be there will be a final of buyers and sellers in this area, and there's a possibility that the sellers may win because the selling pressure is more, and we cannot deny the possibility of the buyers winning here. If the buyers win, the price may go up, and even then it will come back to retest this level as the fresh support. You can raise your hands if you agree with this. I mean, you can say this in the chat. So in either of the cases, we need a breakout first, either to the upside or to the downside. Now if it happens to the upside, I am not interested in buying. But if you are very aggressive, you can still open your buy positions here near 0.9952. Why? Because in that case your risk will be very small, and your potential profits will be this much, and you will have a double bottom formed already. And after that you will have one thing in your favor, and that is a breakout from the falling channel. So you see, these are the two scenarios possible. One is the breaking down. If it breaks down, it is very good area to open a sell trade. This is the plan. And if it breaks to the higher side, one thing that will be, this channel will be broken in that case. If the channel is broken, we are aware now that the selling pressure has reduced, or you can say that for small time the sellers have been overpowered by the buyers. Now if it has been overpowered the buyers, those who could not buy here, they will be ready with their guns loaded to fire as soon as the price strikes this confluence of support. Why I am calling this the confluence of support? One is this horizontal support, and one is this falling channels broken resistance line. So this is a confluence. There are two supports here. So whenever the buyers find an opportunity, they'll be with their weapons ready to fire at this place. So you want to join that bandwagon, you can say that group of people who are going in the direction of 1.0368, and that is the next key level where they'll be looking to book their profits. So we will unload our positions near here. And just a rough idea of the stop losses, I know you cannot get it at 0.9952, so you will get somewhere higher because you will be looking for bullish pin bar or bullish engulfing. So you say you get it at 1.0046. And what will be your stop loss? Your stop loss will be approximately 150 points, and you should get at least 450 points in your take profit, potential take profit. Now you are not getting, no, okay. We will reduce our risk maybe to 103. So I hope you get the idea. I'm not saying that it is exactly 150 points. This will only depend on how the market behaves later, but these are the possible scenarios. The price can break from here also, but I think it will not go that easily, because the sellers who fail to open their positions here, they will be looking for to open their positions here somewhere. Okay, so keep these things in your mind. MGA says agree fully. Thank you very much, MGA, for agreeing with me. You have been with me for a long time. I think you understand completely now how the things that we talk about behaves. So talking about the Great Britain pound, after breaking below 1.1759 area, which was a strong support, actually strong support or strong resistance, I will say just strong key level for us. After a break lower and closing a daily candle with conviction below that level, has opened up now the way for this horizontal level, which we have marked with the small rectangle also, that is 1.1409. Now the price is still slowly moving towards this area. There is a but in this one. There's a possibility that the price will stop here for a while, which is a dynamic area of support. Why I'm calling this a dynamic area is because it is changing every day. Now this is today the levels are 1526. Look at here. Okay, what are the levels here on the right side? Today is 31st of August. Today the level is 1.1529. Tomorrow is 1st of September, 1.1519, and it is changing. So that is why it is dynamic area of support. So it keeps changing as the time passes, but ultimate support is 1.1409, which has been a very strong support in the past here near 22nd of March 2020. So I'm expecting this area to hold for the time being, at least. Even if it has to break, I don't think that it will be able to break in a day, because a lot of buyers will be ready to buy the pound here at the test of 1.1409, I suppose. Now if it holds, should you be opening the buy positions? So as of now, I think now you have understood why I'm asking this question, is that because the answer will be no. Okay, you cannot open buy positions here because the trend is still down, and this trend will be broken only if 1.2293 is broken. Till the time this high is not gone or not overcome by the buyers, the structure of this market is downtrend. Okay, or maybe if I'm just trying to explain one more thing. If after making this low here, the price makes a high here, then this will become your recent high of the downtrend, and if the price doesn't break this, we will not be talking about the buy position. So as of now, this has not become active, so this is the only place that we are talking about. So the structure to break 1.2293 has to break. Okay, till that time we are only looking for the selling positions, and for selling positions we are not going to sell this market on in the middle of nowhere. If the price is very close to 1.1759 again, for some reason or the other, we may think to open a sell position here, but buying, no. So 1.1759 still is the key level on the upside, and 1.1409 is a key level on the downside for the Great British Pound. Talking about the Australian dollar, yeah, we were expecting actually price to move in this triangle, but you see that yesterday's bearish pin bar was so strong, and even when the price today tried to go up, it was sent lower. I want to show it to you on the 4-hour. You see, at the test of this support line here, the price Australian dollar tried to go higher, but was eventually sold off around 0.6903 area, and with the bearish pin bar today again there was small buying in this area. So I can actually still say that this area is holding because the price has not seen a close below this area. Do you see that? Let's talk about the technicals here, friend. This area is still holding, so there is still a possibility of price going to this direction. Now I'm talking about something like this. There is still a possibility of something like this, so we cannot deny that. Of course, a break lower will open 0.6714, but this is also a falling wedge, and falling wedge is actually a falling wedge only if we see this area is bullish pattern. But if you stretch it to the back side, you will see that this is not only a falling wedge but also a head and shoulder. Now this is the left shoulder, this is the head, and this is the second shoulder, and if it breaks lower, then it will open the way to 0.6714. On the contrary, if you ignore this area, then if you continue checking only this area, then it is a falling wedge. Now if you are talking about a falling wedge, then this is a bullish scenario. So how the things unfold, well, that only future will tell. We are not going to speculate the market. Let us see how the things unfold in future, and then we'll take a decision. But as of now, from the 4-hour point of view, this does not seem to be breaking, and if it continues higher, then potentially maybe this market will move to 0.7002 again. Now 0.7002, because I have marked with the it with the rectangle, so this is a strong zone of support and resistance in this forex market. So we are very particular about this 0.7002. This is a very important level because the price is below 0.6869 also. So on the 4-hour now, 0.6869 is the resistance level. I will not say it is a key resistance level, because now I think the key level is this falling trend line which we have made by joining the lows that the price has made recently. So this will not be a key area, but yes, this is a horizontal area of support and resistance. And the next horizontal level of support is 0.6714, which is much lower from this break, almost 140 points away. And if it holds, then the price probably can move to 110 points more to test this falling trend line which we have created by joining the highs. And if we join these highs and these lows, then it makes a falling wedge. A falling wedge is a bullish pattern. I must reiterate, falling wedge is a bullish pattern, so there is a possibility of price going in either of the direction. Now how you will put your money on the line, thinking what? You will open a buy position or you will open a sell position? If this is the question, then the answer is simple. Look at the structure of the market. How is the market behaving? Market is making lower highs, lower lows here till this time. After this, the price has made a lower high here, and the price has failed to make a lower low. So there is a possibility that the price will make another lower low. So you should be looking for a small high being made in this area. Now that is just a speculation. How the things unfold, only the time can tell. Okay, now you already know what are the levels that we should be talking or thinking about here in the Australian market. New Zealand dollar. Well, New Zealand dollar looks towards moving towards 0.6060. We have covered it yesterday. It is moving very slowly towards 0.60 and 60 area, although now the sellers don't seem to be so aggressive near this area. I don't know why, but the price has been moving on the same area, in the same area from last 6 days. This is the 6th day including. So yes, there is a seller. The sellers are aggressive. Buyers took 2 days to climb up to this place, but sellers took it down here. Now the sellers are trying to push prices lower than the buyers' prices. So yes, price is moving towards 0.6060 in reality, but it is very slow movement. If it is moving like this, then it is okay. The sellers are in control of the market. Now I think the sellers are not in much control of the market, and the buyers may overpower them soon. But for them, it has to first go beyond this falling trend line. The buyers need to break out of this falling trend line. After that, if this 0.6231 is broken on the daily closing basis, we can say okay, now the buyers are in control of the market. But till the time this is not broken, the sellers are still in the control of the market. They are making lower highs and lower lows. Expect some lower low being formed here below 0.6060. And if it is not broken, then the price has to, if the 0.6060 is not broken, the price is bound to break above this falling trend line. In that case, one of the hurdles for the buyers will be over, and then the next hurdle will be 0.6231. So this is key level 0.6231 and 0.6060. As of now, no buying and selling in the New Zealand dollar. Keep an eye on it, although it may offer you a good opportunity this year. Talking about Looney has finally closed the day yesterday above 1.3076. That means it has opened up the way for 1.3417 on this market. Should you be buying this? Maybe. Yeah, this is a rising market, is it? So this is a rising market on the daily. Now the only small hurdle is this one. I will mark this on my chart, is 1.3223. This is a small hurdle. Why I'm calling this small hurdle? The price is actually, after breaking, already taken support on the 4 hour. You see, after breaking higher, the price has already taken support on this area, is again taking support at this area. Now if this holds, then 1.3223 is definitely to be taken in the first instance. Now this has a strong relation with the Brent prices. Now if the Brent prices fall, Canadian dollar falls. If the Canadian dollar falls, US dollar rises against the Canadian dollar. But the problem here is that the US dollar dollar index is already at the resistance. So buying this market when the dollar index is at resistance is not a good idea again. So what I'm gonna say, you don't buy this. Please don't buy this. Okay, stop for a while before you buy this, because you don't want to buy a position in a currency which is already at the resistance. Now what is resistance? Resistance psychologically is a zone where the sellers are ready to give up on their positions in a particular market. So if people are ready to give up on their dollars in exchange of euro from their pockets, then why would you be buying the dollar against any currency? So what I'm trying to say here is that the people are now ready to give up on their dollars. Here you can see from the chart. So why we should open any position which is buying the dollar? So here the potential possible position is the buying the dollar against the Looney, against the Canadian dollar, of course. But this does not seem wise. So that's why I have put a cross here, that buying in this market is not a good idea. You may get a cheaper US dollar against the Canadian dollar. How so? If this market of the dollar index, this is the dollar index, if it breaks, if it does not break, if it pulls back towards this region where we are thinking that from resistance zone it will pull back, if it pull back to this area of 104.48, you see in the US dollar against the Canadian dollar, you can get a much cheaper price of 1.2894 area, or maybe even this rising channel support line. So that time it will be a good idea to open a buy position in this market. But right now it is not cheap. It is not justified to open a buy position. So that's why this cross mark here. 1.3076 of course is the support, but if the dollar index breaks to the downside, this is bound to break then. Okay, and the price may come back to 1.2894. That is what my thinking is. Now we will be together till Friday. I think it will be eventually breaking if the dollar index is breaking to the downside. If it does not, if it breaks to the upside, then okay, go ahead, go buy US dollar, Canadian dollar, no problems. I hope you got it right. You buy US dollar against the Canadian dollar only if this dollar index breaks above 109.12. That is all what I want to say. And if you talk about the US dollar against the Canadian dollar particularly, then 1.3076 is the immediate support, is the short-term support. After that, the key level is 1.2894, and on the higher side the key level is 1.3223. Keep this in your books somewhere. USD CHF, no question asked. This is a broken falling wedge, but this broke actually prematurely. We wanted it to coil up here for some time. How I show you the coiling up? Okay, I wanted this to coil up like this, okay, and then go like this, zoom, but no, it did not happen. So let's just delete this one. And now I was expecting the price to come back to this area to test it as a fresh support and then shoot up. But now this is the fourth day, the price is only going up and up. So the Swiss franc is, I think, falling down, maybe because the dollar is not moving much, but the Swiss franc is, I think, weak. That's why it is going up like this. But there is bound to be a pullback in such markets when it pulls back to this area. If you notice any any positive sign like this bullish pin bar, okay, or like this bullish engulfing at in this area, then you should be opening a buy position here with the small stop loss inside the this wedge and targeting 1.0049. Sounds good? Sounds good, guys? If it sounds good, smash that thumbs up button and let me know in the chat that you are agreeing with this idea of USD CHF. And if you have any other idea, or if you have any other other narrative, or say other idea or other thought about this chart, please let me know in the chat, because I want to make it really interactive session so that we can talk. Maybe I will open the Discord lines to talk with each other, but right now we have an option of chat. You can let me know, it is live. So what I was saying, that if it comes here and you look for a buying opportunity, because the structure of the market is uptrend, very strong uptrend, and you definitely want to enter this market, but not at the current levels. Not advisable. Why? Because the price is in middle of nowhere. There's no support nearby. If you open a position here, your potential profits is only to this point, 295, 296, or maybe 300 points. But where is your stop loss? Below this green candle, and that is here, 200 points. If you are risking 200 points to gain 300 points, is it worth it? Is it worth it? Yes or no? Is it worth to risk 200 points, or say 180 points, to gain 300 points? So this trade is not possible, you mean? No, this is possible just by waiting. See, sometimes not having a position in the market is a very good position. Sitting on the sidelines is a very good position, very profitable position. Why? If you wait, there is a high probability that the price will revert back to this area like a magnet, and this area will attract then more buyers, and you will see something like this happening, or maybe something like this happening, a bullish engulfing, and that will be your indication. Yes, the big money is coming in. Okay, go get in the bus. So when you get in the bus, then bus is more probably going to move towards the direction of that bullish pin bar or the bullish engulfing, and in that case your stop loss will be below the low of that bullish engulfing, or below the low of that bullish pin bar that the price has made here. In that case, your stop loss will be, say you open up positions here, your stop loss will be here, 60 points, but your take profit, potential take profit, will be almost 400 points. So this has already given you 1:7 risk to reward ratio. So that makes a lot of sense. In the same direction you're going to trade, but with a small weighting. With a small weighting, you turn the risk and reward in your favor by almost 3 times. 3 times, because earlier you were getting 1:2 risk to reward ratio, and with this scenario you are going to get more than 7. So this makes a sense, a lot of sense. 3 times of what you are going to get earlier. That means 6 times of the risk that you are going to take. If you are taking 1% risk on your one trade, then it is going to fetch you more than 7 times of the risk that you are going to take. Okay, I think much explained about this already. So 1.0049 is the strong resistance that price is going to watch. On the way, this high may offer some resistance. I want to put it on the mark, and I want to label it as small resistance. Okay, so I have labeled it as a small resistance on the way up. Okay, on the support is at 0.9372. This is the horizontal support, but this falling trend line will be acting as a support whenever the price comes to here, come to meet or test this line. Talking about the USD JPY, you see how this is related with the dollar index. Is it not moving in the similar fashion? Now this chart here and the USD JPY here, it is somewhat similar, right? Because this is the US dollar against the Japanese yen, and that was the US dollar against the other all currencies. So till the time I think 109.12 is holding on the dollar index, I think this 139.38 will be holding on the USD JPY. Although these bullish pin bars and the holding at the resistance zones is just showing me that the price is consolidating a bit before a move further, but the US dollar index is not supporting. If the price has to go beyond this 139.38 mark, then the dollar index has to break above 109.12 area. So okay, we are not going to speculate anything here that the price is going to break or not. Whatever happens here, we will adjust to that. If it breaks, we'll trade a retest. If it does not break and goes lower, we are not going to sell this market because this is an uptrend, and so no selling until 130.39 is broken on daily closing. So who will tell me why I have written no selling until 130.39 is broken on daily closing? You have been with me from 39 minutes right now, and please let me know if you have found out why I say no selling until 130.39 is broken on daily closing. Anyone can write me in the chat why 130.39 needs to be broken if we have to open a sell trade. I'm waiting for the answers. Anyone? No one with me? Hello? Okay, so yeah, 135.49 is the support if you want to open a buy trade here, and 139.38 is the resistance. But buying at the current levels is not a good idea because the resistance is very close. Your stop loss is going to be definitely below the support. 340 points of risk for a potential 56 points of take profit. Needs to break support first. MJ is talking, right? It needs to break the previous low first, so that the structure of the market, which is uptrending structure, is broken. Now till the time the previous structure is not broken, we cannot open a sell trade. That's why no selling until 130.39 is broken on daily closing, because this is the reaction low from this high that the price has made. Okay, so we need to go below that reaction low to make sure that now sellers are in control of the market. Very good, MJ, thank you for answering. So I hope you got the idea. 139.38 needs to be broken to the upside to open a potential buy trade, and 135.49 may also offer support, and we can enter in the direction of the trend if we want to. But if we want to enter in a sell trade, the price need to close below 130.39 for that. And I hope I have explained this one good. If there is still any question, you can ask me in the chat. Now talking about the silver, we said no buying silver below 21.11, and the silver trend is down now. I think it's a good opportunity for us to now open a sell trade in this one, because the price has moved below 18.30. Now if it gives us a closing today below this one 18.30, which it is most likely going to do, then this 18.30 will act as a good resistance in the coming time. 16.93 is going to be the support. So I think it is a good opportunity for us to open a sell trade if you want to. In the okay, I have already mentioned actually in this fashion, if the price goes toward 18.30, opening a small sell trade with a small stop loss of 20 to 30 points and targeting approximately 100 to 120 points, I think will be a good idea. You can adjust your risk and your reward as per your account equity, but I think we need a you can use any pullback towards 18.30 as a selling opportunity if it closes below this 18.30 today. There's nothing to talk about here. This is a classic example of breakdown and retest. If it happens, then fine, we are going to enter. But if you are going to enter now, I think that will not be a good idea, because if you enter now, your stop loss will be approximately 40 points and your take profit is less than 120. So it is less than 1:3 risk to reward ratio. So don't enter now, wait for a pullback. If you find something bearish here near the 18.30, it will be a good opportunity to go short with a target of 16.93. After that, we have a target of 11 in this one. So if you want to hold, you can even hold because the direction is down. Okay, this is simple logic. You can hold your positions if you want to, just keep your stop losses tight. Talking about the gold is also trying to break the broken resistance line that we had drawn. Actually, first it broke that resistance line. We thought that it is going to go up, but it was rejected at 180. That means the buyers are not interested in the gold anymore. They think that the gold is not very cheap. What is the opposite of cheap? What is the opposite of cheap? Oh, I forgot. Why? So the gold is very cheap. What is what is that word? Oh my god, I'm in lack. I have lack of words now. Overvalued, you can say. Overvalued? No, costly. So yes, the gold is very costly at this area. They want to find it cheap. If they find it cheap at 1681, they'll buy it. But if they don't find it cheap, maybe they'll be looking for cheaper prices, and that is 1451. Now 1451 is a very interesting price for me, because when I see the gold chart, I see that in the year 2019, when the price broke from here, in the year 2020, the price found support at 1451 area. Okay, so this was a good area of support, and I think if this 1681 is broken, thereafter the very good area of support is this one. Otherwise, this area here was also a good resistance in the past, and then after a support here, so 1555 may also find some support. But this is a very strong area. You can see from the charts that I have created that this was an area of interest. This is a good area of interest, 1451. So after 1680, there is a potential of gold prices to go towards 1451 area. Okay, so what now? We should we wait for the prices to go beyond 1681 here to open a short position, or do you think 1681 will hold and the gold will start rising soon? In both of the scenarios, we can actually adjust towards the markets. Whatever happens, it doesn't matter, we'll adjust to that. But opening any position, buy or sell now, is not recommending at all. So please stay with me, just watch the gold going anywhere it is going, and then we will see how we can utilize the movement of gold in any of the direction. Right now it is not a good idea to open a buy or sell trade, because the price is in middle of nowhere. So stay away from gold. That is my humble suggestions to you guys. But if you ask me what are the key levels to take to talk here, 1681 is the key level to the downside. On the higher side, we have 1753 as the key level. Okay, this is second last. Brent has yesterday actually it has hold the 97.57. that was the crucial area, but today it is trading most of the time below that level. You see on the 4 hour, it is most of the time it is trading below that, and it is still holding as a resistance now. So if the strong level is holding as a resistance, why will be opening for a buy position? Why? Because this falling channel is broken to the upside, and now the price has tested almost that area again, and there is a possibility that the price will start going further up. Now if that is the case, what you can do is, okay guys, this was actually okay from top down analysis. I want to show you something on this one. The price made a highest high here, okay, then it came down but failed to close below the low of this one, so it went sideways, broke out to the higher side again, then started moving in a channel to the downside, failed to break this low again. Okay, 91.49, it failed to break this low again. It made actually a low of 91.49, but this is the low that we are talking about here, and now it is finding support at this level. So the one who bought crude oil here is still looking to buy that again and again, and eventually it just broke that falling channel also. That means the consolidation is over, so there is a high probability that the price will shoot from here to the upside. Now I think the price may even converge to 91.49 area again, because this is an area of confluence of two supports. Why? One is this falling channel which is broken is going to give some support to the price whenever it tests this, and one is this horizontal support, and this is not just a support, this is an area from where the takeoff happened, this takeoff, okay, to the 123 levels. So there are a lot of buyers who are looking for this price here. So I'm expecting those buyers to enter the market again to push the prices to 107 and then eventually 123. But if it does not hold this time, that means the crude oil is going to go back to the previous levels, which are these levels and maybe these levels. If I mark them on the chart, so that means their levels will be 86.49, and after that these are the lower levels at 66.09. That is what I want to tell you guys. So 91.49 is a crucial support. If it breaks, not actually 91.49, but I want to tell you this low here, should I make that also visible? Yeah, this one. So this is 90.22 is the area that I want to talk about. So this area, if it is broken, then I think there's a long way to go to that downside. So what I was saying, that on the hourly, if you want in the to enter in the direction of uptrend, you can draw a small counter trend line, okay, by joining the highs. Actually that is also broken. You see, I think a closing above 97.57 now will indicate an up move towards 107.67. so please keep an eye on this one if you want to trade Brent. Otherwise there is nothing much about it. Trading below 90.22 will be a good idea, or trading close to this area here at 91.49 is also a good idea. If the price price clings to this falling channel's resistance line, which is now support, if it clings to this area, then how the price will be moving? The price will be moving something like this in coming time, and eventually if it comes to this area here, you can open your buy position, and then the price will definitely go like this. I'm sure about it. So I will just keep this arrow here like this, so that we can trace it what happens tomorrow. Okay. Tomorrow or day after, let us see how it looks on the daily. So yeah, this is what I think is going to happen. I'm not erasing it so that we can review it tomorrow and day after. Talking about the euro has broken out of this falling trend line. There is a potential double bottom setup already. Okay, this double bottom will be a breakout after 1.5252 area is broken. But yes, euro has a potential, huge potential to go to this level. Why? Because euro we are talking about against Australian dollar here. Okay, and Australian dollar is performing. How Australian dollar performing on the daily? I told you, 2 green candles, 2 red candles, and this still results in a downtrend, in a down move of approximately 150 points. Okay, so still 150 points lower in 4 days with 2 greens and 2. But euro on the other hand is rising. Now if the euro is rising against Australian dollar, what is going to happen this chart? At the support, of course something of this sort is going to happen. Now slowly and slowly I think it is going to go towards 1.5252 levels. Anwar Muhammad Osman, is there an automated method for trends and channel on JF4? I don't think that there is any JF4. Is there JF4 released? I know only JF3, man. What are you talking about? Am I lagging behind? I am not updated. Dustbin released JForex 4. Now you are forcing me to open up their website to check. Swiss Forex web platform. No. Dustbin.com. Have they released JForex 4? I think they are working with JForex 3 still. JForex. No, it is just JForex 3. JForex is a fact. No. JForex 3 is the one. Anwar, no. You cannot use JForex 4. There is no JForex 4. It is just JForex 3, my friend. Okay, anyways, you say sorry. That means that means you are already trading in the future. No, there is actually no way to trade. Only concern if you can actually make some strategy based on channels. But the problem here is that it is only possible in Java, because if you talk about the visual Java, that the platform that Dustbin gives you to write or make your strategies, it doesn't have any block that is called as channels, or where we can define the channels. That is the problem. It will be so easy. It will be so easy to trade if we know how to, open the positions at the test of these channels. It will be so easy. I understand your question, Anwar Muhammad Osman. I understand you want to maybe you want to talk about something like this. Yes, whenever the price tests this channel's support line, I want to buy this. Yeah, something of this. But yeah, unfortunately I'm not aware of any of this program, and if it is, then you have to write it on your own using Java, or maybe use some programmers. But yes, it is possible with strategies. Okay, with the strategies. Yeah, you launch the strategy and then it is possible. But and you have also possibility of testing this strategies in the platform. So yes, it is possible, but with Visual Java you cannot write that program because the channels are not there in the Java. Maybe you can ask from Webhub, who is doing webinars on Visual Forex, where he writes the programs using the visual blocks. Well, that answers your question, Anwar. I thought that I can explain more, but if you're satisfied, then fine. So what I was talking about the EUR is that it is headed towards 1.5252 as of now, it looks like. But you see, when it is moving like this, I have made a small pullback to this, because if something keeps moving in one direction, it is not going to sustain for a long time. But if it pulls back and then moves in the same direction again, there is a more possibility to go in that direction. So I'm expecting it to come back to this area to test it as a fresh support again, and then those who could not buy their positions while this breakout may enter again and push the price towards 1.5252. And out of this, one thing that I think is already happened on the 4 hour. If you see, the price broke out and then it came back to test this broken resistance as the fresh support. Now if this has already happened, then there's a possibility that this price will not come back to this area again and will keep rising towards 1.5252. So that's all from my side, my friends. If you have any more questions regarding the technical analysis, or if you want me to open and look into some specific chart of your interest, where you have put your money on the line, or maybe you are holding it in your portfolio, or you have analysis for any particular pair that you want me to have a second opinion for you on that pair, you can write in the chat and we can discuss it. And if there is nothing else, then we can turn this webinar down and see you tomorrow at 16:30 GMT. We are doing this webinar every day. So in the end, whatever I say to my viewers almost every time whenever I finish my webinar, that now I hope you got the idea about the support and the resistance levels that are of interest in the coming hours and days. Now my request to you is that please keep in mind to never risk more than 1% of your equity in any single trade. This is very crucial to keep you alive or your account alive for a long time. Please do not risk more than 1% of your capital on any single trade, and try to look for a potential profit of more than 3 times whatever risk you are taking. Your potential profit should be 3 times the risk that you are going to take. With this note, I shall end this live stream. Please press the like button if you find this webinar useful for you. Leave your suggestions in the comment section and consider subscribing to the channel for more such webinars. Also, you can join the Dukas Forex community, where there are so many things for the Forex traders. The links are there in the description. I wish you a very happy and a profitable day. Thank you very much for joining me. See you tomorrow at 16:30 GMT. Bye bye.